Welcome to Second Take, the show that focuses on the issues behind the news. Power utility Eskom reported interim results this week. Terence Creamer joins me to discuss some of the issues that arose. Terence, welcome to Second Take. One of the standout points was a decline in sales. What drove this, and is it a cause for celebration or concern?
Well, we're in a tight system, so I think the fact that sales have come down has helped Eskom somewhat to keep the light on. And that is their sort of main mandate post the load shedding crisis of a few years back, that they want to keep the lights on even though the system supply and demand balances are tight. So I think they tick the box in that area. But I think we have to look at that decline from about 114,000 gigawatt hours last year to 111,000 gigawatt hours this year during that half-year period. It's quite a substantial decline. And we have to wonder, what is happening to drive this, and is this a fundamental change in the way South African consumes, or is it just the nature of our low economic growth at the moment? And I think we have to get that picture clearer for ourselves so that we don't plan in a way that is inappropriate to maybe a changing market circumstance. I don't think we really know the answer yet. We do know that during this period that Eskom spent quite a lot of money in buying back power from ferrochrome producers, for instance. So that knocked quite a lot of gigawatt hours off the bars. And then we also saw that Hillside smelter wasn't operating at full capacity, so that also knocked quite a lot out the bars. But I think we have to look at where South Africa's economy is at. Where's the energy intensity of this economy going? We've traditionally been a very energy intensive economy. And then of course we've had the mining strikes during the period, not for the full interim period, but that would have also lowered demand for Eskom's product. And you've got a large demand side management program, and there's this mantra of energy efficiency and switching the lights off or switching appliances off when we're not using it. So there's a lot of things in the mix. So it's some ways a cause for celebration because of the tight system and the fact that we need to create space for maintenance in the system. On the other hand, it shows that this economy is really not pumping, I think, and that this possibly our economic growth trajectory is changing. What we're seeing is more consumption from the consumer economy and less consumption really from the producer economy, which is very worrying actually in the long term, because without the producer economy really coming back and consuming electricity and producing its products, hopefully at a lower rate, a less energy intensive rate, we're really not going to create the jobs. If we don't create the jobs, we don't deal with the inequality problem. If we don't deal with the inequality problem in this country, we're going to have this recipe for social unrest continuing, and we've really seen signs of that this year exploding around Mariaan. So I think yes, cause for celebration because the lights are on, cause for concern about really where's this economy going.
The 3 M's, that's multi-year pricing, maintenance and municipalities, also featured strongly. What was said in this regard?
I think on the municipality side, as mentioned earlier, more consumption really relatively from residential consumers, less from the productive sectors. But and mostly that comes through the municipality. So Eskom doesn't supply most of us directly, they supply our municipality who supplies us. And they did raise this issue of concern around indebtedness or defaulting by municipalities in paying Eskom. So it's something that they flagged as a worry. Then obviously we've had this discussion around what municipal markups are, and nurses talking about having a standard markup, etc. They didn't really get into that discussion, but it's on the agenda, and you can see it's going to start playing itself out when we get into the discussion around pricing. Again, the multi-year pricing issue came up strongly, and Eskom again justifying its application for 16 times 5 tariff increases between next year and 2018, saying that they need this really to take the company to a standalone sort of credit rating that it doesn't require the sovereign as a backup all the time, the country as a backup all the time for its ability to raise the debt finance it needs for its activities and its expansion program. So the multi-year pricing discussion, the way they really wanted to go through some of the details around, for instance, the way they value their assets and replacement costs and highlights why they had done that for their application, as well as the factor that they're going to need to start funding IPPs and renewables. That is in the application. So they took us through some of those elements within the pricing application. These are things that are going to really come into sharp relief when NERSA has the hearings, and I think they're going to be areas of high contestation. We saw in Parliament yesterday the DA raising a number of issues around the way Eskom values its assets and the way it's made its application, saying that they're wanting this sort of super duper balance sheet that no other company in the world would want by the end of the 5-year period. And Eskom responding is that they do want a very good solid balance sheet by the end of that pricing process, the 5-year pricing path, because they feel that they don't want to always have to rely on government as a backup. So it's going to come into a highly contested environment, I think, in the new year. And then on the whole maintenance front, I think the level of unplanned outages at Eskom's plant is a serious worry. It was flagged by the CEO at Brian Darms as an issue. But, they've also said that they're trying to use these periods of lower demand to do more maintenance. They did maintenance through the winter months, which was a first for Eskom. And now we're going into the peak maintenance season. So, Eskom, there was a lot of focus on the fact that it made a 12 billion rand profit. But in this, it's also its revenues went up to over 70-something billion rand on the back of purely on tariff increases, because we saw the demand falling. And they made it clear that they're wanting to use this period of summer to really step up and get into that maintenance backlog, because the plant is aging, it doesn't run as well, and that there is a direct relationship between the age and the amount of unplanned outages. But again, I think at the NERSA hearings, this is going to be a feature. Why have we got these sort of levels of unplanned outages? Is Eskom really running at a tight ship, or are the assets being allowed to deteriorate? So I think they really want to get their ducks in a row around maintenance, and that's why for the next 6 months we're going to be seeing a lot of maintenance spend. And then there's going to be, obviously, the second half is always a lower consumption period from a South African consumer, and therefore they're saying if at best they're going to break even for the rest of the year. So yeah, all those 3 M's came up, and they I think were positioning a lot of it for what's going to come in January around the price hearings.
And finally, there was also an announcement about the departure of a very senior executive. How significant is this development? Yeah,
I think everyone was taken a bit by surprise that Paul Flaherty has tendered his resignation and that he'll be leaving in July next year after the AGM. Paul came in at quite a difficult time. There had been a number of leadership changes at Eskom, and there was a lot of uncertainty around the funding plan. They've got this big 400 billion plus expenditure that they are doing around Kusile, Madupi and Gule, the transmission network, and they didn't have a funding plan when Paul came in. He has steadied the ship, and I think he is highly rated, and he fights Eskom's corner quite well, as we saw in Parliament over the last few months, where he stands up and explains in quite clear terms, why Eskom is doing certain things and why it's requesting certain things of the South African consumer. So I think it did come as a surprise. I think between him and Brian Darms, they are a fairly tight team, and they've been able to, steady the Eskom ship from a very difficult period where we had a number of chief executives and acting and interim and resignations and board chairmen resigning, and they have, steadied that ship quite well. And I think there was some unfair commentary in the newspapers following the Flaherty announcement, saying that Eskom's still in this sort of management dilemma where it doesn't know whether it's coming or going. And I don't think that is the case. I think things are quite different at Eskom today than they were in 2008, 2009, and I think they have steadied things. I still think that it would have come as a bit of a surprise, especially for the rating agencies and for government, because of the key role that Paul Flaherty has played in steadying that financial side of the business. But the fact that he's given them until July next year to find a replacement, and they're saying they're hoping to find a replacement early so that that person could be part of the final year results, and that there's a strong basis for going forward, and the platform is laid. I think means that I think they'll manage the transition quite well, but still a surprise and probably a bit of an unhappy surprise for everyone.
Terence, thank you very much. That is the Second Take show for this week. Thank you for watching and join us again next time for more news analysis.